Hello, happy Labor Day, everyone. I hope everyone's enjoying some good food and company today. So, for those of you who don't know me, my name is Michael Kutch. I'm the portfolio manager here at HPK Provident. So, I had been doing this the week ahead as a blog post, but I'm also going to do a video version for our clients. So, this is just a quick summary of what happened last week and what I'm looking for in the economy and markets this week. So I'll get right into it. Just a quick disclosure, nothing that I say should be taken as a specific recommendation. Please consult us or your financial professional regarding your specific situation. So this week, let me start off with pulling up a chart of the S&P 500. So we haven't had much price action this week. We've yet to eclipse the highs of August 14th or get past the highs last Friday. Friday was a big up day following remarks from Fed Chair Jerome Powell at the Jackson Hole Symposium. So what markets responded to in such a positive way were when he flagged that there's potential weakness to their labor market mandate. So what that means and why the market celebrated that is if the labor market weakens, then the Fed's likely to cut in September, which is what markets are pricing in right now. So keep an eye on that. We are seeing a negative divergence in the RSI indicator, which is in this purple box here. What that means is momentum's not really keeping up to price action. So that gives me sign for some concern that we might be in store for a pullback. And we have been anticipating that for about 3 weeks now. Just with valuations where they're at, we've had such a strong run from the April lows that it would just be healthy for a pullback here. September is typically a weak month out of the year. Now, those metrics change a little bit if there's a good amount of stocks above their 200-day moving average, which they are in this environment. So maybe we don't see much weakness, but I think it would be healthy for a 4 to 7% pullback. And we have raised some cash to be able to take advantage of that pullback. And at least at this point, we're buyers in that environment unless something drastically changes. Now, some good news is we have seen the market broadening out. This is the equal weight S&P 500. So over the last 2 weeks, that's been pretty healthy. Also, rates have been pretty cooperative, so that's a good thing. The 10-year and the short end of the curve have both broken that uptrend line. Now, the 10-year, if that continues to drop, it's a good thing for equities, just because that's a reflection of the lending market. So if companies have more access to capital, it tends to stimulate the economy. But if that's really dropping because of economic weakness, and we're not there yet, but then the market would get concerned. So next week is a big one in terms of economic data. Tuesday is the ISM manufacturing numbers, so that's expected to see a slight uptick, however, still in contractionary territory. Wednesday is the job openings, as well as ADP jobs data, I believe. And then Thursday is ISM services. That is also expected to tick up a little bit, but that's not too far into expansionary territory. So that's really been what's been holding up the economy. The services spending has been very strong. Now, if that starts to weaken at the same time where tariffs are taking effect and maybe having an impact on goods purchases, it could be a sign for economic weakness and something to watch out for. And then Friday's the big one. We have non-farm payrolls. Expectations are for 100,000. That's above last month's 75,000. But make sure you pay attention to the revisions. I know I will be. The prior monthly report had 256,000 downward revisions to the prior 2 months. So what that means is instead of the 3-month average being around 150,000, we actually came in about 35,000. So hopefully that trend doesn't continue. On the plus side, wage growth has been very strong. So that's a good sign for the labor market. Jobless claims remain very low. So that means hiring's slowing, but we're not seeing layoffs. So that's an environment that's sustainable, at least for now. And I think a lot of it has to do with less people entering the labor force. Immigration is way down. So if job openings come down in tandem with labor force participation, you can see that unemployment rates stay around the 4.2% level. So that's historically the lower end. So that's a good thing. We'll be back on Friday for our Facebook Friday Live. So tune in at 12:30. We also have a seminar that's scheduled on Social Security for September 24th at 5 p.m. So registration is open. We have an event link on our website. You can also register via Facebook. So make sure you tune into that if you're interested in Social Security. Again, I hope everyone has a wonderful Labor Day, and I hope you guys tune in on Friday. All right.